We had our markets trading higher for most of the morning, just dipped into the red before lunchtime. But like yesterday, the JSE really appearing to be bucking the overall global trend. We have the futures closeout today. To what extent do you think that's perhaps skewing the action?
I think it's certainly playing a role, Stephen, but we are very much led by what's happening in international markets, and I think there isn't really a trend anywhere in the market at the moment. Volatility is really ruling what's happening both in international markets and in our own. So obviously the futures closeout, which started at 12 o'clock, certainly is playing a role in our market, and I think because we are actually at levels where most of the volume in terms of the major strikes are sitting, that is causing a sort of a lot of the volatility in our own market. Certainly the writers of the big options took a lot of pain during the last week as we had the big declines in our market. They had to delta hedge themselves, and that caused a lot of the pressure in the market, and they are protecting it in size. So I think we're probably about at the levels where we will see the eventual strike settlement and the futures closeout levels. They will be protecting this in size, but what happens is you find massive gamma spikes when the market oscillates around these levels, and the writers of the options would be protecting this very much so. So I think what you're finding is not really a bucking of the trend, but rather just the volatility around the closeout, the settlement as we see it between now and for the next 80 minutes as we head into the closeout of the futures.
Nerina, have we seen less contracts than normal being rolled over? Are more contracts being allowed to expire?
Not really. I think a lot of the rollouts or the closeout have actually been allowed to be rolled out into June. We certainly are seeing some expiry, and I think there's about another 30,000 odd that will be allowed to expire at this stage. But I think there's been a lot that have been rolled over to June. I think there's just been too much volatility at this stage to really make any call, and I think it depends very much on which side you were positioned, whether you would decide to actually let it expire or whether you need to actually roll it over. So I think it depends very much on the reason for taking out the derivative position, which allowed you to decide whether you would actually let your option position expire or whether you needed to roll it out to the June positions.
Just looking at some of the market volatility we're seeing at the moment, I mean, there seems to be no clear direction. We just don't know how these things are going to play out. So how's that playing out in the markets? Because nobody really seems to know what to do.
I think one of the biggest problems that we have emanating from Japan is really lack of proper data. There's a lot of speculation going on around so much of the information that is emanating from Japan. You get all sorts of experts talking on many of the news channels, whether those are nuclear experts or whether those are tsunami experts or whether they are telecommunications experts. So there's a lot of expert opinion coming out, but that doesn't necessarily refer to the actual status or the actual situation in Japan. And I think this makes it extremely difficult for market participants to actually take a definitive directional view on where things should go. You also, of course, have actual market participants in Japan, in Tokyo themselves, trying to actually deal with a lot of these. We've got companies physically moving staff away from Tokyo to the likes of Osaka. Then you have people actually having to live there, having to deal with lack of transport, ATMs maybe not working, having to not be able to buy things in shops that they might need. So, you know, there's the entire spectrum of a humanitarian disaster of people having to deal with day-to-day activities being uprooted and moved to different cities. And at the same time, you don't really know, how severe is this problem? Where will the next direction be? How will this rebuild take place? What is the monetary intervention that the Japanese central bank will take? So much is being speculated about, and there's actually very little real data that is coming out. So I think a lot of the reaction that we're seeing in the market also is largely speculation rather than real flow. Specifically, if we look at the currency movement, for example, if we look at the yen US dollar, which has actually had some significant moves with the yen strengthening quite substantially over the last couple of days, I would venture to say that we've seen a lot more movement on the back of expected flows back into the Japanese market rather than real capital flows happening. So it means that people are expecting that there would be massive repatriation of Japanese investments in foreign markets back into the yen, rather than real flows having taken place. And once we actually see those real flows taking place, we might see even much bigger strengthening positions on the yen taking place.
Of course, that's not just the yen dollar, it's also the yen rand, because we have had Japanese investors, retail and institutional, cashing in some of their South African assets, particularly in bonds, I see.
Absolutely, and I think South Africa has always been known to be one of the most liquid and best tradable emerging market currencies and markets, both on the equity and on the bond side. So when the emerging market investors have to start liquidating positions, South Africa is often one of the first to start feeling the pain, and I think this has been a case in point again. So when we start seeing the real flows as opposed to just the speculative flows, certainly we would be one of the first, and I think we have certainly experienced that over the last day or two.
Well, following the futures closeout today, we have index rebalancing on the JSE tomorrow. RESI 20 becoming the RESI 10. Tell us about that, Nerina.
Yes, it's going to be a relatively quiet closeout in the sense that there's no changes to the top 40 index, the sort of the most prominent one, but a fairly big event in the resources space. For many years now, the benchmark index in the resources space have been the RESI 20 index, indicating that there are 20 companies incorporated in that index. But it's really been a grouping of some massive, enormous, diversified mining, gold, platinum and oil companies grouped together with some really small and relatively insignificant junior mining companies, a grouping that has not always been very comfortable to manage from both an index tracking and a derivative basis. And due to market demand, the JSE announced in December last year that they will be converting this to a RESI 10 index, with the result being that tomorrow in the closing auction, the 10 smallest companies in that index will be dropped from the index, and as of Tuesday when the market opens, it will now henceforth be known as the RESI 10 index. So you will only be left with the large diversified miners, the two big gold, the two big platinum companies and Sasol, and really you will be not be having any of the smaller companies like Wesizwe and Petman and Centuria, and then even the likes of Harmony and DRD Gold will no longer be in this derivative or benchmark RESI 10 index. Obviously they would still be resources companies, they would still be in the overall resources index, but not in the RESI 10, the derivative based index.
A couple of snippets of business news out today. Investec pre-close briefing, that's for the year to the end of March, so not quite there yet. The company does say that operating profits in the UK are going to be ahead of the previous year. In South Africa, in line with that, what it does point out though is that it's got a strong balance sheet, low gearing, and it's also seen a slower pace in non-performing loans getting better because of the slower pace of economic recovery. Your view on that Investec briefing?
I think what we've seen from Investec is that contrary to many of the South African banks, the rate at which they're trying to unwind the impairments is certainly not nearly as good as that of the South African banks, and most of that relates to the UK market, of course. But what the positive thing for us in that is that they've got relatively high levels of cash on their balance sheet. We've seen that since last year already, and I think part of that is preparing themselves for the implementation of Basel III. They've certainly not indicated that they're going to increase their dividend to get rid of that cash, and certainly in an uncertain time like this, I think it's something that will stand them in good stead. That is also one of the reasons why their leverage is actually relatively positive. They've had very good results from asset management, but the drag on their performance definitely is the private banking side, and that really is the hallmark of Investec. So not a bad pre-close briefing, but certainly not out of the woods just yet for Investec.
And perhaps just a quick comment on Telkom's new CEO, Pinky Moholi, and it had been widely speculated that she would become the CEO.
Yes, somebody with an illustrious background and career. She certainly comes with all the right credentials in terms of both education as well as work experience. She is an electrical engineer. She has spent the best part of 25 years in the telecommunications industry. She started with Telkom as far back as 1994 and spent most of her career actually working at Telkom in various positions. And then, of course, she was with Nedbank, one of our executives for almost or just over 3 years. She rejoined Telkom in May 2009 as the managing director, so not a surprise to see her after a very thorough process at Telkom being appointed as the new CEO. Jeffrey Hedberg, the acting CEO, his contract expires at the end of March, but they have asked him to stay on until the end of June when the financial results will be released, just to ensure a good handover process. The market likes the fact that there is more certainty now. It's been in a big question mark around Telkom, and I think the market appreciates during such an uncertain time overall to have something of certainty in a company like Telkom.